Keeps rising. Let's bring in Osaic Chief Market Strategist Phil Blancato. All right, Phil, before we talk about that.
You know, everybody out there in TV land, he finds this stuff himself. So you should all know he takes the plate to his credit finance stuff.
I'm a movie buff, man. In some ways, I know Wall Street, expert like you, gets nervous when you see something like this, right?
Very.
I mean, they're selling their life insurance policies, but the flip side of this is, why isn't there greater, in your mind, or is there a great frenzy in our country? Because our market is in the midst of something remarkable, and I don't get in cabs, I don't go to restaurants and see people talking about this.
Well, what's exciting is that I think there's this euphoria around AI that people just don't understand it. There's fear. There's, wow, I can do so much cool stuff with it. But when it comes to the market, you said something earlier that's very important. It's a handful of stocks that are the winners here by far. And what happened in the first quarter was a bludgeoning there. Remember, the Mag 7 at one point were down almost 14%. Large cap growth were almost down 10%. So people got hurt. They said, oh my gosh, I haven't felt this pain well. The market was only down 5%,
right,
but everybody else hurt. And then we had this gigantic rip higher. Why? Because this idea that there's still real revenue being made in these stocks came to light, and we saw this bounce back. Valuations got a little bit, how much they're worth got a little bit better.
Right.
And suddenly, there was just, even here, a bit of a piling in. That's why your guys there, you showed all those money managers like me, piled in because we got things a little cheaper. Now, here's the key. Notice what's happened the last week or so. It's struggling. We keep bouncing off the highs and coming back down. Why? Because you're back to things being a bit expensive. And that's the key here. So all the people that are cashing in, I hope they're not cashing in just the 7 names. Hope they're cashing in.
Well, they're cashing in for 3 names. That's in Korea,
that's
right? There's just 3 names that's powering that market higher. They got 50 million people and 100 million accounts. I mean, they're going all in. I wanted to, before we even get to some stock picks and things, you've always talked about the consumer, how strong the consumer is. All of a sudden, you know, we've got mortgage rates, which we're looking pretty good. They're skyrocketing higher. You know, all these 30-year bonds, it's not just America. All around the world, 30-year yields are through the roof. How much or when does that become a threat to the market?
It already is, and that's why you're seeing the bond market reverse and people losing money in bonds this year. You know, the average new mortgage in the United States is 47 years old. We don't see millennials taking out mortgages. They can't afford it.
Right.
This is going to make it worse. Now, it also means that people who borrow money, it's not just mortgages everywhere. It's going to be more expensive.
Right.
So rising rates is a headwind to the consumer. But let's not forget, the K-shaped economy, those with the most money are still spending. The gasoline hasn't been an issue for them, so it hurts, just not as much as per saved so far.
You just read my mind. So this is about an hour ago. Believe it or not, the #1 sector today is consumer discretionary. Automobile stocks are up. Consumer services, durables, retailing. I guess it's still the folks with the cash are still so powerful, so strong that you know. Here's my thing. To me, it feels like it makes, for lack of a better word, Wall Street and even the Federal Reserve, in my mind, find the lower half of our economy irrelevant.
That's exactly right.
And I hate to say that.
And the reason why this is up so much is because are they worth more today than they were a month ago? Yes. Are they worth more today than a year ago? Yes. So the people with all the wealth are worth that much more because the stock market's up, depending on which one you're in, 8 to 15%. So suddenly it's all worth more, and it just proves that the folks who drive the most have the most money, so the gas hasn't been an issue. Ultimately, what this means is the U.S. consumer is still extremely strong. And I will say this, those people who make less than $100,000 a year got a big tax break.
Right.
They ultimately are still gainfully employed, still making more than the rate of inflation, even though the spread has got tight. So there's not real pain there hanging on. They're just not doing great.
I want to, so we talked about, you know, this market and how lopsided it is. So this morning I had a hit on Fox News, and one of the makeup artists, she came out and she was like, is the market getting hammered or hit? And I was like, no, why? So she showed me her account, right? And what's really amazing is that right now today, you've got just, you know, you got 34% of the stocks beating the market. You've got 37% that are down 20%.
Yep.
It's easy to have a basket, your portfolio to be down a lot right now. What are you telling people about stocks that are not performing? Like, what do you say? Hang in there, hold on, it's going to come back?
Look, at the end of the day, we grew up with diversification matter. Don't put all your eggs in one basket. And what's happened is it's been irrelevant for the last 3 years. The cap-weighted S&P, the ones that have the biggest names in it, is up almost 10% more than everything else combined.
Right.
But I do think that if the narrative plays out that interest rates eventually fall this year, those 37, are all going to do really well. What's happened is, in an expensive rising rate environment, which we just hit on, at a time when a little worried about the consumer, it went back to the companies that are driving AI. I think they just have to be patient, and that's a critical part about this.
All right, let's go to this is a real quick on the barbell is one of your favorite things. A lot of folks talk about it. Typically, you have safe bets and then a little bit of a moonshot or whatever you want to call them. Is there any time you ever say, hey, I want to go a little bit heavier on the aggressive side with my barbell?
I'm so happy you put this slide in here. And because that goes back to the last slide.
Right.
For that person that's got stocks that are down, I'm going to say something I've never said on your show before. It's time to add some moonshots. Why? We're about to see two things happen that have really never happened before, one specifically. SpaceX coming public is going to be a gigantic event.
Right.
And while I do think there's probably a sell-off after it comes out, maybe some point down the road, but initially, it's euphoria. So if you added, let's just make it up, add the NASDAQ, the Qs to your portfolio, just to get the access, because it's probably going into the Q. What, just today, OpenAI, coming out and saying they're going to go out. Anthropic probably not far behind it. So that's what I want
to get a little bit more aggressive here on the moonshots.
Because I think we're looking at something we've never seen before in history.
I want to talk real quick about some stocks here. You still like this NCNO. I saw about a month or so ago, someone on Twitter said, hey, you know what, Phil, I'm getting hammered in this. This is to your point. I mean, it's down here, obviously, if you liked it here, you must love it down here, but why?
So this is the classic baby being thrown out with the bathwater. If you look at their subscription growth, it's up 70% every year. High double-digit earnings growth. A company that's unique in the AI space, specifically around financial services. They haven't lost revenue at all. What happened was when all those software names got hit, this got hit with it unfairly. So for those who own it, that person who asked me, I can't respond on Twitter. Forgive me, I'm not allowed to. I'm glad we brought it up today because this stock, to me, the valuation, what it's worth, is even better. The earnings are even stronger, and they got subscription growth.
Only have time for one more stock, and it's a microchip. It's a tech name.
Love this name.
Why this when there's a million chip names to pick from?
I like the chips and shovels of AI. This is a connector company. It makes semis. But you're using it already in your car, in your phone. It controls temperature. It converts signals within it.
Right.
Most importantly, this is kind of the brains of what happens in the data centers today. You need much more of this to connect these data centers together. It's cheap. You're talking 60% earnings growth on this company.
Right.
I got a chance to buy something cheap and have a lot of fun doing it.
Good stuff.
Thanks,
that was
buddy.
a great segment. Thank you very much.
Thank you.
All right, folks.